Hello there, YouTube fans. It's Michael Palumbo again. I'm out here in my backyard. It's a beautiful day. I love the fall. It's nice and it starts getting a little chilly. Just the air just changes. It's a little cleaner. I figured I'd come out here today, and I could be, of course, it's Michael Palumbo from AttackThatTicket.com. We could always be reached at 1-877-99-NO-TICKS, 1-877-996-6849. But today I want to do a little piece about auto insurance. Basically, what auto insurance is, the importance of having the correct auto insurance, and the different components to it. Because I find that a lot of people, I run across this a lot. People don't quite understand and know what they're buying when they get auto insurance. So you buy a car, and a lot of people will go to the insurance broker and say, "I just want the cheapest policy out there," and that could mean a lot of things. And you really don't necessarily want the cheapest policy. You want the correct coverage. And before you could even be conversing and talk about what the correct coverage is, you got to know and understand the different levels of coverage. And that's what I want to discuss. So on a very broad basis, there's two components to insurance. There's first-party benefits and third-party benefits. And we're going to talk about each one of those individually. The thing about it is, when you register a car in a state, it could be New York State or another state, you're compelled to buy auto insurance for your car, and I think everyone knows that. But you're not compelled to buy all the levels of coverage which you would be eligible to buy from your insurance company. You don't have to buy all of it. What the states care about is if you run a stop sign and hurt somebody in an accident, that you have coverage to cover their loss. They don't care about your loss. If you are driving down the road and you have a brand new car, you don't have collision on it, and you wrap yourself around a tree and you total your car, the state of New York doesn't care if you have coverage, auto and collision, to replace your car. But if you do the same scenario, but you hit a pedestrian, they care if you have coverage to pay the damages and the medical bills for the person you injured through your negligence. So first party coverage means coverage that your insurance is a contract. You're contracting with the insurance company. First party coverage is you and the insurance company are the first two parties. So first party coverage means I'm buying insurance from you, insurance company, that if I have a loss, it covers me. And third party coverage is I'm buying insurance company from the insurance company, you, Mr. Insurance Agent, so that if I injure someone through my negligence, you pay that person, that third person. That's third party coverage. And that's the critical part that the state of New York demands you have. Third party coverage, third party liability coverage. You may have heard the terms 2550. It means $25,000 in insurance to any individual you might hurt, $50,000 in one total incident. That's a 2550 policy. And then there's the first party coverage, comprehensive, if your car gets damaged in a windstorm or vandalism, and collision. Now collision is if you're driving down the road and you get hit in the rear, you don't need collision on your car, because that other auto insurer's third-party coverage is going to cover your property loss, your property damage, and if you get physically injured, and if you're seriously injured, and you can collect monetary damages and pain and suffering. But if you're at fault for the accident, the other insurance company is not going to pay you for what you did wrong. So you need collision to cover your asset, your rolling asset. That's what you might want that first party coverage for. Now, what a lot of people do is they're like, I just want the cheapest policy, possible. Every element of insurance, of auto insurance that you buy, costs. There's a line item to it. So to get a 2550 liability policy, it could cost maybe, let's say, for 6 months, it's $140 for that sliver of the policy. So you say, okay, I want that. But you never explore, well, what about $100,000, $300,000? How much would that cost me? What would $250,000, $500,000 cost me? Because you could be in an accident and very easily injure someone. That would cost them. They would have $100,000 to $250,000 worth of damages, and you only got a $25,000 policy. Now you're coming out of your own pocket. What people don't realize is that to buy a $250,000, $500,000 policy is like maybe $30 more every 6 months than the $25.50. That's where you should be definitely spending your money. You got to buy $25.50 in New York State. So you're going to lay out that $140 or whatever, $140, $150 every 6 months. You're going to lay that out. So you got to explore. Well, how much is it to get $100, $300, $250,000, $500,000? You're going to find it's not like 10 times as much. It's not like, oh, if you want 10 times the coverage, you got to pay $1,400, not $140. It doesn't work that way. It's like, oh, well, to get $250, $500, that would be $230 every 6 months instead of $140. Very good money. You're protecting yourself. And then what they do on the other side of it is if you get a new car or if you lease a car or if you're financing a car, as part of the lease agreement or the financing agreement, or if you just buy a new car yourself, you got buy a car cash or otherwise, you got a $35,000 asset rolling down the road, maybe 25, 35, who the hell knows, 70,000. You're probably going to want to cover it in case, you run off the road one night because of ice and you get some serious damage to it. So again, the state of New York doesn't care if you get that or not. But if you finance a car or you lease a car, it's going to be part of your contract. You got to cover it. You got to carry that. And you're going to find that to cover, let's say, a $35,000 potential total loss. Let's say the car's only worth $35,000. You drive it off the lot, and 10 minutes later you drive it off a cliff, and they got to pay you $35,000. They're going to want, it could be $400 every 6 months for that portion of it. So I'm not saying don't get it, but if you got a car that's 5 or 6 years old, you probably don't want to get it. It's not worth it. But another thing you'll do is you get a low deductible. So you get like a $500 deductible. Look, it's not worth getting a low deductible. What you want to insure yourself against is a total loss. You don't want to insure yourself against banging up and getting $750 in damage. And you got a $500 deductible, so you can get $250 back. The lower the deductible, the more money you have to pay for the collision. So again, in my opinion, like I have a relatively new car. I think I got a $1,500 deductible because if I scratch it up or whatever, something happens to it, I'm not insuring it for every little tchotchke ding or dent. I don't care. What I'm insuring against is a total loss, and there's a huge difference just for going from a $500 deductible to a $1,000 deductible. You might pay $400 every 6 months for a $500 deductible, but a $1,000 deductible is only $200 a month. It's a lot less. You got to ask your insurance agent. Go line by line and decide what coverage you want that you don't have to buy, that you may want, and how much is it at the different deductible levels. And now there is one type of first-party insurance you have to buy. That's called PIP, or no-fault insurance coverage. And what that is the way New York State does it, and many other states, most states, but some don't have this rule. No matter who's at fault for an accident, the first $50,000 of medical bills gets paid from the vehicle's insurance policy that you were sitting in. So if you just took a ride from a friend of yours, and let's say your friend was rear-ended, so it wasn't his fault for the accident. Even though it wasn't his fault for the accident, the other driver's insurance company or the other driver does not have to pay your medical bills for the first $50,000. It comes out of the insurance company who insures the car you were in. It's called PIP. And that again is a first-party benefit. The state mandates that one element of first-party benefits because they don't want small little lawsuits over $5 or $10 or $50,000 worth of medical bills. The way the state feels about it is for the first $50,000 you shouldn't have to sue. But that is mandatory. Now again, you can get additional PIP for up to $100,000. And when you look at the mandatory PIP, which is again no fault or PIP benefits, personal injury protection, it's cheap. Again, it's probably like $60 or $70 every 6 months, but to get extra extra $50,000 in coverage, at least in New York State, is maybe another $10 or $15 a month every 6 months. So people are like, oh, I just want the cheapest one possible. Again, you might get into a relatively serious accident, and you might want that additional coverage to cover you up to $100,000, and to not get it for like $15 every 6 months is a mistake. And especially because if you were involved in an auto accident, even if you have private insurance under state insurance law, you have to submit the bill to your auto carrier first, and maybe they might deny it or whatever. But you have to use that insurance. You can't even say, well, I'm just going to use my own personal insurance. I got good coverage. No, you can't do it. It'll get denied because the injury happened in an accident. And unless that policy is exhausted, the auto policy is exhausted, your private insurance doesn't have to pay. So that's one element of first-party coverage, personal injury protection that you have to have. That's the only element they care about, the state of New York. They don't care if you have collision. They don't care if you have comprehensive. Another good element to have is the towing and rent-a-car. Again, it's very cheap. And you get broken down somewhere, your car's just in the shop for some reason, and you're not going to have it. I think it might have to be a breakdown or an accident, but I've used it numerous times when my car was in the shop. Someone hit my car in a parking lot and took off, and so I had an insurance claim. I brought to the body shop. I took an Uber to the Enterprise Rent-A-Car. Gave my policy information. They gave me a car. I never even had to lay out the money. So that's very convenient, and you're literally talking maybe $20 every 6 months. So there's other little things, but when you sit down with your insurance company, the bottom line is there's first-party benefits and third-party benefits. The vast majority of the first-party benefits, the insurance company doesn't care if you get it or not. Third-party benefits, you have to have liability to cover a loss of a third person that you injure through your negligence. Most people just go for $25.50 because it's cheapest, but they never even explore, well, if I get 10 times the coverage, it's not going to be 10 times the price. It's going to be a fraction of the price. It might be like 10 or 15% more, and that's the loss you need to, you could be devastated. God forbid you hurt somebody in an accident, and you rack this person up, and they're in like a hospital for 6 months, and it happens, and they have damages, exceeding $200,000, $300,000, and you only had a $25,000 policy. They're coming after you for the overage. Your insurance company only has to pay out to that $25,000. If they get a judgment against you for $400,000, you're on the hook for $375,000. So it's worth getting $250,000, $500,000. Another thing is, if you got $250,000, $500,000 coverage, personal injury lawyer, even though it could be like a $400,000 case, they're just going to sell it for the policy amount. They're not going to chase an individual. They're not going to take a judgment, which of course they can lose if they do a trial. If they can get $250,000 on a case for their client, they're going to take that money. So even if it was, unless it's a very excessive situation, which is rare, a $250,000, $500,000 policy should cover you. But that's what you're getting and buying when you buy insurance. And you need to understand what insurance is, and then to protect yourself properly. So, video's over. Again, it's Michael Palumbo. Thanks for listening. TackThatTicket.com to get a traffic ticket, auto crime. If you're charged with driving without insurance, I'm going to do another video about that. Very serious charge, very problematic. As a matter of fact, I just had a very interesting case, which I'm going to highlight in my next video, and I'll link these two videos together. But if you get charged with anything in New York, the number is 1-877-99-NO-TICKS, 1-877-996-6849. Or you can find me on the web at TackThatTicket.com. Thank you. Have a great day.